Well, welcome back, everyone. It certainly is an incredible market today, a trader's market indeed. We've seen the S&P 500 move into the uppermost quadrant of this four-quadrant channel. That's the performer plunge quadrant. We have seen sell signals emerge as of the midpoint of last week, and down the hatch we've come. Let's go and take a look at the hard right edge of the chart. We started seeing that selling on the 3rd of June. We saw a little rebound back on the 4th, and on Friday last week, we had that big drop. Monday was a day where we attempted to get back up off the mat. We attempted to do so again in today's trade, having opened here and coming up to the 74.91 area, but we weren't able to hold these major volume point of control lines, and down the hatch the market went, down to a low of the 72.47 area. Now we've obviously come well up off that low, so there's been plenty of opportunities in the day today for shorts and for longs. Let's break this daily bar into pieces here. From 9:45 a.m. Eastern Time, we were in a sell signal state all the way down to lows that we saw around 12:35 p.m. Eastern Time. And of course, we got a turnaround, a little basing formation, and we've been in a retrace. From the drop earlier in the day down to the lows that we've seen for the session, we came up to the 23.6% retracement, then got above the 38.2. We watched the NASDAQ very carefully to see if it would cooperate with that retracement. It did, and we got above the halfway marker. So this is certainly a showing of strength, especially if this market is able to get back and hold above roughly the 74.15 area. That's the waterline that really matters at this stage for the primary market. Getting back and holding above that 74.15 area establishes a higher probability to try and rise again and play back up to the highs that we saw intra-session today, or potentially higher. Now, the selling is not necessarily done. We have an incredibly high probability pattern using the triple S indicative toolkit on that 4-hour chart, which casts its signal out 3 to 5 days. It's called pre-trade conditioning. And we've got effectively 3 signals giving us a high probability for a rollover. We're left with the 3 signals: price action below the bottom of the MSR channel, double red dots are in play, and down the hatch we've gone. Now, of course, we've had a retrace on the 10 a.m. 4-hourly bar. That retrace has still not taken price back above the speed lines. So what I was doing in today's trade was taking advantage of short side trades while we were falling and long side trades while we were rising, using the incredibly powerful signals of the Champion Trend Pack Toolkit and the Triple S Toolkit all combined together. Here's what that combined view looks like. Let's take a look at it on a 5-minute chart. We can see that clear transition from sell signal state to evacuate potentially the sell signals. No more breakout forecasters to the downside. That champion cross zone thinning out, the MSR channel flattening out, the triple S indicator coming out from underneath the bottom of its channel back into the channel, and then converting over to green. So shorts on the way down, longs on the way up, and I was able to produce a fair bit of gain on the day, trading each account individually. So I traded 8 different Apex eval accounts and combination thereof. What we've got over here is a rise on the day, or gain on the day, of just over $14,500, which is pretty darn good on an intraday performance. Looking forward to be able to replicate that, of course, in the days to come. And of course, we need a market that is as tradable as this one. Now, past performance is not indicative of future results. All trading is at your own independent trader's risk. Consult your registered financial advisor before doing any trading. But again, folks saw me do this in market, live in the active trader room and on WealthCharts, over multiple trades from start to finish, on the way down and on the way up. It's been an incredible day. Where is this market going? Back to the beginning of the video. If we're able to get back up and hold above that 74.15 area for the primary market, it establishes a higher probability to rise in tomorrow's session. However, if we close below that 74.15 area, especially if we close below the 73.70 area, we are much more likely to see continued downside risk play out. And that downside risk could take us to this black line or slightly lower. That black line effectively is the center of that long-term channel. Coming from the top quadrant, mean reverting to the center of the channel is a normal occurrence, and that is what I think is in play as we speak. It may take days, but it's unlikely not to happen unless we are able to establish support back above 74.15. I hope you enjoyed this video. I look forward to sharing more insights with you in videos to come. Take great care out there. And of course, we'll see you first thing in the morning in the private active trader room at 9:15 a.m. Eastern time for members there, and on WealthCharts at 12 p.m. Eastern time. Have an incredible rest of your day, and thank you for watching.